Thinking of buying a property in the UK? There's one cost that catches many people out: stamp duty. In this video, I'll explain what it is, how much you'll pay, and the extra rules if you're buying through a company. Stamp duty land tax, or SDLT, is a tax you pay when you buy property or land in England and Northern Ireland. Scotland and Wales have their own versions, LBTT and LTT. Think of it as a one-off tax on the purchase price, due when you complete the deal. If you're buying your main home as an individual, you pay stamp duty on anything over £250,000. First-time buyers get a discount. No tax up to £425,000. But for companies, it's different. Stamp duty usually applies on purchases over £40,000 and the 3% surcharge applies automatically. The rates work in bands, similar to income tax. For residential property, 0% up to £250,000, 5% on £250,001 to £925,000, 10% on £925,001 to £1.5 million, 12% above that. For example, if you buy a house for £300,000 personally, you'll pay 0% on the first £250,000, then 5% on the next £50,000. That's £2,500 total. If a company buys the same property, the 3% surcharge applies, meaning the bill jumps to £11,500. There's also a higher rate of 15% stamp duty for companies buying residential properties over £500,000, unless it's for a genuine rental business. This is to stop people using companies just to hold expensive homes. You can't avoid stamp duty, but you can plan for it. If you're a first-time buyer, check if you qualify for relief. If you're buying through a company, always factor in the £40,000 threshold, the 3% surcharge, and possible 15% rules. And always confirm the exact calculation with your solicitor before you commit. So that's stamp duty in a nutshell, whether you're buying your first home or investing through a company. Want more plain English property guides? Subscribe and check out my playlist.